and welcome everyone. Thanks for joining in to this Twitter Spaces with Kotak Cherry. Today I have a very special guest with us. We've got Navneet Munot. Navneet has been uh, heading HDFC AMC, and he's been a very strong pillar of the mutual fund industry. He's been in the industry for close to 3 decades, and I've always enjoyed my conversations with Navneet. He brings with him vast knowledge about overall macroeconomics, uh, various parts of the market, how market cycles behave, and I'm sure it's going to be a very interesting discussion with Navneet today. Navneet, thank you for taking time out and welcome to Cherry's Twitter Spaces.
Thank you, Shobit, for having me, and thanks for the nice introduction. Entirely my pleasure to interact with you and all the listeners today.
Great. Uh, Navneet, we have a bunch of thoughts that we want to uh, ask you. Let me first straight get to the point, which I'm sure most of our listeners would want to hear your thoughts on. So, uh, we are seeing markets almost, I can say, at their all-time highs, and they've been there now for some time. So, it started to make people think that while India is showing all good signs, we are seeing all the positive news in terms of our growth numbers, in terms of how India is starting to emerge as a favored country with regard all other countries. And this time around, we are not just comparing ourselves to developing countries, we are also getting comparisons versus other large economies, and we are already starting to show signs of strength there. Uh, do you really think that as we now look forward, uh, we are going to see a decade which may belong to India? And as you famously said, uh, the Amrit Kaal for India is looking like starting. I'm very interested to know your thoughts on that.
So, Shobit, we all celebrated our Independence Day yesterday, and we also celebrated entering into the second year of the Amrit Kaal, a period where India is likely to transform into a developed country economically and in many other ways. Uh, I think if you look at rest of the world, and you talked about, like, if you look at what's happening in China, what's happening in Eurozone, what's happening in US, and relative to that, if I have to say something about India, I would say "Sare jahan se acha" on a relative basis. And throughout our career, we have always been told that if the global economy sneezes or if world markets sneeze, India gets a fever. This time, several other parts of the world have got fever, and we are yet to sneeze. And then this is a result of, I think, hard work of several years where we have put a lot of structural reforms in place. When we compare ourselves with the rest of the world, where the world is geopolitically realigning, and I think India's strategic importance to almost every country, every business has gone up substantially from the position we are in. The world is demographically diverging. What I mean is that a large part of the world is aging. China was a big growth driver for the world, and now, for various structural factors, they are likely to slow down. In fact, the population has almost peaked and it's like to decelerate. The world is digitally redesigning, and in that world, India is clearly emerging as a leader. So, I mean, if data is the new oil, or I call it data is the new renewable energy, then India is going to lead the world. The world is decarbonizing, and I think again there are interesting opportunities for India to look at our infrastructure or to look at our growth very differently. The world is deleveraging, which means that a large part of the world has taken excessive leverage. Whether the central banks have printed so much of money, or in terms of the fiscal or the fiscal deficit that countries have run, or the household sector or the financial sector, the amount of leverage they would have. Compared to that, I think in India the balance sheets have been at its best in a very very long period of time. Whether we look at household balance sheet, corporate balance sheet, the banking sector balance sheet, and overall debt to GDP is substantially lower in India. So, with all of these structural factors, the structural reforms that have happened, I think starting from a very low base in terms of per capita GDP, a low debt to GDP, over the next several years, I think there are exciting opportunities for India. So, for an extended period, India would remain one of the fastest growing major economy in the world, and we've just become the fifth largest, and over the next couple of years we are likely to be the third largest, and maybe in a lifetime, in a generation, we can see a very, very big transformation of such a large country, the most populous country, which has always been the largest democracy, but also the largest in terms of population, and the economic transformation that is likely to happen. So I feel like very excited about the time we are living in.
Very interesting. Nandit, actually, I think we recently had even RBI come back and say that we are going to continue to expect 6.5% GDP growth. I think that number gets passed on as almost like something that we expect out of India, but 6.5% is no mean number at the size that we are at now, right? So you said we are going to possibly be third largest. I think those should be really exciting opportunities that it will create. So coming to that, if I look at how the budget panned out, and I think it was important in a manner because this time around the government focused on infrastructure in a very, very big way, and we all spoke about it when the budget came that it was a significant percentage of the GDP that India has never invested. How do you really see that coming along? Because we've always and I've sort of seen and read about infrastructure spending as a big agenda item of all governments historically for the last 15 years or so. But how do you think that that's going to be a game changer if it is going to be, or is it just going to be again more lip service?
No, I don't think so. It's lip service because you can actually see the outlay that has been done over the years, the way it has increased, and also the pace of execution across various sectors of infrastructure. And this is not only the physical infrastructure, I mean the ports, highways, urban transportation, and various other spheres in the physical infrastructure, but also the social infrastructure, which is education, healthcare, skilling, and very importantly, because the world we are living in, the digital infrastructure in India, the virtual infrastructure in India, where we have transformed from the most data poor society in the world to the most data rich society in the world, and the quality of our telecom infrastructure or the digital infrastructure. And all of this, I think both the central and the state government's focus is very praiseworthy. And variety of things have happened over the years, not only in terms of the regulation, in terms of our execution capability, in terms of the funding sources. You are seeing, the instruments like InvITs, REITs coming of age, and there are other opportunities. For example, I talked about the world decarbonizing, and as we build our infrastructure for 21st century, whether it's in the energy sector, whether in the transportation and various other sectors, we are building our infrastructure very differently than the way several other countries who grew in last several decades have done it. So I feel very positive about what we are doing on the infrastructure, because it's also led to enhancing our potential growth rate. Once you have the quality of infrastructure, you improve the ease of doing business, you improve the ease of living for people, and a lot of other potential for us in terms of manufacturing, etc., go up structurally. So I feel very very positive about what's happening in the infrastructure in India.
In fact, I must mention I was driving on the outskirts of Pune yesterday, being a holiday, and it was unbelievable the kind of concretized roads that one could see so far back in the outskirts of the city. And of course, all of that meant a lot of cars were racing around, going towards those places. It just was opening up newer places for people to go and explore without overthinking whether it's going to be difficult to reach those places. But
I mean, you
we
can
have,
see in Mumbai the amount of infrastructure which is getting built across the city, how life can change dramatically over the next couple of years for all the citizens here. And so is the case wherever you travel in the country. And you talked about the Mumbai Pune highway, but I mean, I get an opportunity to travel across the country and you see a similar development across the country.
yeah, absolutely, absolutely. So tell me, Navneet, I'm more interested to know that while infrastructure is, and you spoke about actually infrastructure in a far wider way, not just roads and ports and uh, railroads, etc. But you said even telecom infrastructure, data infrastructure. Actually, these are equally strong pillars and maybe helping us leapfrog much faster ahead of some of the developed economies as well. Tell me how, from a foreign investor point of view, it plays an important role because that's, I think, one thing that we've always heard that foreign investors keep thinking about India's infrastructure as being one of the impediments for them to go big. How do you see that helping foreign investors think about India?
I think you might have heard from almost every sovereign wealth fund in the world to enhance their exposure to India. Almost everybody is showing interest in various spheres of infrastructure in India. From anecdotal evidence, I keep hearing the people that they are hiring here, they increasing the commitment to India, and also it's reflecting in the real money that has come to India. I think in the form of FDI and also the variety of other assets where the global investors have shown their interest. So both in FDI as well as the portfolio flows are clearly showing higher commitment to India, and which is likely to increase substantially over the next several years. I mean, you can't think of like any other country in the world where this kind of infrastructure setup is happening at this stage. The scale at which we are doing is very different than most of the other parts of the world. So it's a very big opportunity for lots of investors who have long-term capital to deploy in high quality assets. And with with a country which has a lot of predictability in terms of policies on some of these things that they can deploy a large amount of money.
In fact, for the benefit of our listeners, almost about 75,000 crores was what I think the government planned to spend on infrastructure in this year's budget alone. Might be uh, overall budget numbers for
No,
many
it's
countries.
much more than that. So our overall budget outlay has gone up, if I remember correctly, from 1.5% of GDP 5 years back to almost 3.3% of GDP. And I think if you put together the state governments and also the local governments, our outlay on infrastructure has gone up very substantially over the last couple of years.
Yeah,
And
sure.
also the
Actually,
execution, I mean, the government this year, I think recently I was reading that the Ministry of Highways has announced that the budget that has been allocated to them will get utilized by December. I mean, historically, we know that most of these budgets remain unspent till the budget day, next budget. So I think the another praiseworthy thing actually is the execution, not only the outlay.
yeah, that I think is an important point. Execution matters equally more than the outlay. Uh, Great. Navneet, let's move on. Let me also try to understand in the same breath. We spoke about infrastructure and we spoke about foreign investments. Eventually, I think, as China showed the path, every other country which has moved from being a developing country to a developed country has become a very strong manufacturing player. How do you think that is going to happen, if it is going to happen, or India is going to take a different route to become a developed country?
So one of the big opportunity in India has been and will continue to remain the potential in the services sector. the large consumer base as well as the talent pool that we have, and now with the digital connectivity, our ability to serve the rest of the world in the services. And you can see that across the board, uh, the global capability, I mean the capability centers that are opening. Almost every large organization in the world, in the Fortune 500 or the top 500 companies, would have a large service center in India. I mean the services that they have outsourced to India, or they would have their people. But over a period of time, with a confluence of factors, it's likely that we also move up the chain as far as manufacturing is concerned, where some of the other countries, particularly China that you mentioned about, has done a great job over the last couple of decades. I think in last few years, what we have done on let's say availability of land, or reliable and relatively affordable power, as the logistics improve, and we talked about the infrastructure, as the availability of capital at a reasonable rate. I think all of these factors of production, and very importantly labor, the skilled labor, with all of that, I think we have a lot of opportunities in the manufacturing. The China plus one is indeed a big opportunity for us, as the whole world looks at a more reliable supply chain than a most optimized supply chain. Every organization, every country in the world is looking at more reliable supply chain, and India has a big opportunity. Automation is another big theme, as manufacturing also is transforming. Manufacturing is undergoing a change, and almost every industry is looking at greater automation. So, and I talked about earlier the whole decarbonization theme, where several of the industries will see a transformation, whether in the energy and transportation, and many other sectors. So, with all of that, with supportive policies, I think I see a lot of opportunity for India on the manufacturing side. Currently, I mean, we are very small from a global perspective. I mean, if you look at the size of our manufacturing and size of our exports relative to rest of the world, so opportunity is very large, and I think we are moving in the right direction. And there have been, like of late, a couple of sectors where we have clearly seen India stepping up its efforts, and the results are in front of us.
Interesting you said that, because one thing that we keep hearing from some of the critics of India also is that while China plus one is an opportunity, but it is an equal opportunity for many other emerging markets. We have seen how textile as an industry lost out to Bangladesh. We've seen how whether it is Philippines, whether it is Vietnam, whether it is some of those other emerging economies, take some part of what could have been India's share of global manufacturing. So, what is it that you think we as India are doing, and what is it that we need to do more to actually become that preferred country when one talks about China plus one from a global perspective?
No, I think some of the glorious, I think our successes have been in sectors like pharma, in chemicals, historically, specialty chemicals, and all. Light industrials is another area where India has been doing well. Auto and auto ancillary, where we had huge successes over the last several years. But off late, the another sector where you have seen India really shining is electronics. And I'm sure you would have read, I think yesterday or day before that, India is becoming like almost the second largest manufacturing hub for Apple. There are many other great success stories over a period of time. I think the government's focus on building the whole ecosystem for semiconductor manufacturing, even on the entire solar energy ecosystem. I think there are a variety of things that's happening. Defense is another very interesting area where I think the indigenation and the modernization, the opportunity for us to significantly ramp up our capacity on defense. We are one of the largest importer of arms and ammunition, and with the government's intense efforts, and the successes that some of our own manufacturers had, I see tremendous opportunity in that sector over the next several years, and we can emerge actually one of the larger exporter over a period of time as we build greater capability. So there are multiples of these themes that are clearly showing that there are successes even on the manufacturing side.
So you do strongly feel that there is a chance that we will emerge as a strong manufacturing player globally.
I think so, but we must keep in mind. I think whether the policymakers, whether investors, businesses need to keep in mind that we are also competing with many other countries, and I think we'll have to constantly, have to earn our place, and that's why the focus on, as I said, the factors of production, whether it's the land, labor, power, logistics, capital. Constantly, we have to ensure that we remain very competitive. Policies remain very very supportive, very conducive to promote this, and I think we don't miss out on the opportunity that has come to our door. And as I mentioned earlier, that the whole world is looking at India as a strategic partner, given the geopolitical importance of India against the rising influence of China, which globally people are kind of like concerned about from a geopolitical perspective. We need to make the most of it.
Okay, very interesting. One thing I think, talking of successes that India has done well in, is I think clearly the financial services space, where I think we have successfully been able to uh, get a large number of investors across the length and breadth of country to start to look at financial savings versus the old preferred options of looking at gold or looking at real estate in physical form as the primary saving instrument. Uh, I think I am tempted to ask you that, given that we are now seeing a huge trend of retail investors coming in and investing into mutual funds, into stocks, that part of the infrastructure has, uh, in the last 5 7 years, shown disproportionate growth. Do you think that this trend is sustainable, where household savings have started to completely move away from real estate and gold towards equities and fixed income instruments? Or you think that, uh, uh, and I know that your answer could be a little biased, having been on this side of the business, but I genuinely want to know from your heart, what do you think is in store for those kind of allocations?
So, Shobit, formalization of the economy, digitalization of the economy, uh, financialization of economy, financialization of savings, digitalization of finance. Some of these are like very, very big transformational trends. And within that, a larger proportion of savings going into the financial assets. I think we have a long way to go. I mean, still, we haven't really touched the surface. If you look at the total pool of savings in India versus what comes into the financial markets or the capital markets. But one of the tipping point was, I think, 21. So if one of the big tipping point for India in terms of financialization of economy was 2014, where the success of Jan Dhan Yojana led to almost every Indian getting integrated into the mainstream finance, with everybody getting a bank account. The 21 kind of heralded another era where I can call it a Jan Nivesh. While it was not a scheme driven by the government, but confluence of factors led to a period where, if you look at April 21 to March 23, if I remember correctly, in this period, foreign portfolio investors sold around 1.5, 1.7 lakh crores worth of equities, and mutual funds were a net buyer of 3.5 lakh crores of equity. And that provided not only stability to our markets, but it also helped in overall financial stability and macro stability. Now, I mean, our overall monthly SIP flows have crossed 15,000 crores. We are seeing the number of new demat accounts or the investors into mutual funds increasing at a very rapid pace. But all said and done, even today there are only 3.8 odd crores unique investors in mutual funds, versus, I mean, if you look at I mean the overall population, or the people who need and financial investment vehicle like a mutual fund. So we still have a long way to go. The another way to look at it, if you look at the overall household balance sheet in India, if we just make one single balance sheet for all the households in India, that will be around $10 trillion, and this will look something like this: 50% in real estate, 15% in gold, 15% in bank deposits, and around 4.7, 4.8% in equity. So the equity allocation for the households as a whole is still abysmally low, and it has only one way to go, which is higher. So I see tremendous opportunity for mutual fund industry to expand its net and reach out to lot many more households to offer a product like SIP. So we have a long way to go as far as financialization of savings is concerned, and within that, larger money coming into the growth assets like equities.
Very interesting. 50% real estate and not even 5% equities.
Overall household balance sheet in India, yes,
Yeah,
absolutely.
yeah, that's quite a starking number to think about. So let me dig a little more there, Navneet. So we know now that there are SIPs available starting at as low as few hundred rupees. In fact, there are some
100 rupees, not few
available,
hundred.
yeah, even 100 rupees. So it is as low as it gets, and it is as easy as it gets to start to tick off versus buying gold or buying a house, which is really a longer term thing. But and since you have been part of the industry for so long, from an industry standpoint, what are the things apart from, of course, delivering returns, which I think everybody is focused on disproportionately, but what are the things that mutual fund industry brings to the benefit of investors? If you could just give me some thoughts of why should one look at mutual fund as a way of investing into, let's say, equities we spoke about, or generally savings through mutual funds as a concept. If one talks about what is the benefit of going through mutual funds versus other avenues, if you could just at a broad level summarize it for us.
I mean, so other avenues, meaning comparing within the capital market itself, like you talked about a substantial increase in the demat accounts, and also the increase in the volumes in the equity market, where I think the volumes in the option markets have zoomed up over the last couple of years. But I'm sure everybody would have looked at that SEBI study in partnership with other market infrastructure entities, where, if I remember the number correctly, Shobit, I think 90% of close to 90% of the investors lose money. And versus you have a vehicle like mutual funds, highly transparent, provides you liquidity, provides you a very, very transparent portfolio, and I mean, very, very well regulated, and highly, I mean, in a disciplined manner, one can invest in over a period of time. If I look at the growth over the last couple of years in the number of new investors or the number of new SIPs that have been coming, there are three or four things that have happened, which is giving confidence to investors, and I feel very positive. Why I expect a lot many more investors to come to the mutual funds through, let's say, an SIP route. One is a track record. Now people have seen there are funds which have been in existence for 15, 20, 25, in fact close to 30 years. Some of our strategies go back 25, 28 years of delivering returns, beating inflation, beating benchmark, that longer track record. And in this period, one would have seen many business cycles, many economic cycles, many the global political cycles, so on and so forth. But the kind of wealth that has got generated by remaining invested, or keep investing in a disciplined manner. So that track record is something that people can see. Second would be the transparency that I talked about. I think this level of transparency that you get in a mutual fund product is, I think, one of the best, not only in India but in the world relative to any other saving vehicle. Third, I think, is the technology, the ease of KYC, or ease of transacting, ease of investing, ease of getting information, and people like you have played a big role over the years, apart from the industry and what the regulator and the rest of the ecosystem has done. And last, I mean, just trying to create an acronym, the track record, transparency, technology, and that's why I'm using the word training, but it's like broader investor education. The conversation we are having, or the other efforts people like you are doing, and so is the campaign of mutual fund Sahi Hai, highlighting the importance of power of compounding, long-term investing, remaining disciplined, trying to beat volatility by investing in a disciplined manner through SIP. All of that has played a big role in making mutual funds a lot more popular product. And but as I mentioned earlier, this is just beginning, and we have a long way to go.
Yeah, no, no. In fact, when you were speaking, I was noting it down. So, transparent, regulated, with track record, and convenient. So, I think it is
Yeah.
TRTC. That's well said. Uh, Navneet, I was reading up a little about what you write, and I must urge users to follow Navneet. He's difficult to be found on Twitter till now, but I can assure you that you will find a lot of interesting stuff that Navneet writes about. I personally read some of his publications, and I am going to dig a little bit into the Person of the Year piece that you also write, Navneet. But I'm also, before that, wanting to touch upon your recent newsletter called The Final Frontier, where you spoke about the importance of how the world is moving towards growth, and concrete is an important part in that growth, which has multiple ingredients, and how, from a portfolio standpoint, people should think about asset allocation. It may all sound very technical. Can you, Navneet, please explain it too in your own words?
Sure. So the backdrop was that in the month of August, I mean, no conversation about India. I mean, the I in India is complete without the I of Independence Day. And over the last couple of years, the couple of other I's have that got added, is the I of infrastructure that we talked about earlier, or the investments, whether the public or the private investments, as well as the investors, domestic and foreign investors. And talking about the infrastructure, I mean, which is the backbone of the economy, and we discussed quite a bit about it some time back. The backbone of physical infrastructure is concrete. And interestingly, I mean, concrete is second most used substance in the world, second only to water. And concrete is actually a combination. It's a combination, or it's a mixture of cement, gravel, water, and sand
And sad,
in,
yeah.
in in a specific proportion. And in isolation, these constituents won't give the strength that the concrete provides. So basically, in fact, if you have the incorrect proportion of these, then it can actually weaken the concrete. So same thing is with the investments, right? I mean, you need to get the right combination in terms of the asset classes. And within the asset classes, how do you create the portfolio? So that was a point, I think, putting an analogy with the concrete, that the personal finance also need a concrete of the asset allocation, and a portfolio diversification.
That's very, very good, and I'm assuming a very easy comparison for all listeners to remember. You need a good mix of different asset classes to really make a very well balanced portfolio.
And
Coming
it
to
also
that,
should be,
yeah,
just to complete that point, and also that recently Harry Markowitz, who is known as one of the founder, or one of the father of modern portfolio theory, which gave a sound theoretical framework of the portfolio construction, passed away recently. And so I mentioned that. While historically, before modern portfolio theory, the investing was around individual stocks. and you look at what is their net present value. And while one will create a portfolio without thinking about how, a combination of stock would lead to, I mean, without giving enough thought about the overall portfolio approach or a portfolio construction. It was just like individual securities, which had all the focus as far as investing was concerned. And he came up with this whole theory of modern portfolio theory, an efficient frontier, which was basically that one needs to maximize risk adjusted returns, where the idea was that you try to maximize return for a given level of risk, or minimize risk for a given level of return. And this can be achieved by diversifying across securities which have uh, low correlation or the negative correlation. So you not only look at individual securities, but you also look at the correlation among those securities.
True, true. That's absolutely critical and important. And coming to that, I'm tempted to ask you that all of the Markowitz theory may be very difficult for our listeners to really implement in their portfolio. So, are there any easy options for people to really go about? And since you've been with mutual funds for so long, we keep hearing about balance funds and hybrid funds, which try to combine these mixtures. So, uh, can you talk to us a little bit about if there are such kind of options which can help users to uh, consider a good asset allocation strategy?
No, absolutely. And those are the 2 points we made. Number one, that you don't have to really go into the scientific aspect of it. I mean, I keep saying that a lot of mathematics has come into finance. Nothing wrong with that, but sometimes it has come at the cost of common sense. Or the implementability for a common investor, which is not a good thing. But mutual fund makes that journey very, very, I would say, easier. So if one investor has to, pay heed to the tenets of diversification, getting it right is easier through mutual funds. So you have schemes like balanced advantage fund, where portfolio manager dynamically allocates across equity or bonds, or you have aggressive hybrid funds where roughly two-thirds of the portfolio is in equity and one-third of the portfolio is in fixed income and money market. You have multi-asset funds which invest in equity, fixed income, and gold, so you get like exposure across asset classes, so on and so forth. So they make things relatively easier for investors. So you just choose the asset allocation you are comfortable with. So if an investor wants, let's say broadly, 60/40 or a 70/30 kind of exposure between equity and fixed income, instead of looking for several funds within that, can actually look at a fund like an aggressive hybrid fund. And these funds not only diversify across asset classes that I mentioned, equity or fixed income or gold, but even within equity, you get more diversified portfolio, diversified across sectors, across market cap, which is like large cap, mid cap, small cap, so on and so forth. And within that, you get the expertise of a portfolio manager in security selection in terms of choosing the right stocks within those sectors or within those market cap buckets. So in the I think I mentioned that the mutual funds not only create the concrete of personal finance, but they also help build the road to financial freedom for investors.
Yeah, yeah. No, that's so true.
And then the
Uh,
second important point in the article, we mentioned that the modern portfolio theory. As I said, I mean, these are very elegant theories, and we don't have to get into that. But when they talked about the risk and return, that an investor should look at both aspects, the expected return and the expected risk. And for them, the expected risk equated to volatility of returns. If an asset class is more volatile, then more risky. If it is less volatile, then less risky. But we made a point in this letter that for a long term investor, this volatility, which is basically the short term fluctuation in prices, may not be very relevant, right? I mean, the real risk for an investor who's a long term investor would be like losing capital invested. That should be the risk. The volatility actually can be used as an advantage. It can actually be a friend of an investor. If you are disciplined, if you are investing in a disciplined manner, if you are investing regularly, then through SIP or STP, you don't have to fear much of the short-term volatility. Rather, you can actually make the most of it through the rupee cost averaging that SIP or the STP provides you. So volatility, which has been considered as like the biggest risk, can be actually used as an opportunity for investors who think long term. So those are the 2 points, that the asset allocation is made easy through the hybrid mutual funds for any investor. And the other point was that for a long term investor, volatility can actually be a friend instead of be an enemy.
Yeah, so you are saying that systematically investing money through an SIP can actually give you a bigger benefit versus just uh, thinking and getting worried about market going up and down. SIP can actually be a good way to overcome uh, that up and down movement of the market. That's a good way of looking at it. Uh,
Absolutely.
Navneet, um, I also, since we spoke about uh, different asset classes, I'm also wanting to hear from you. And we've always enjoyed your thoughts on how interest rates in India are moving, and that's something which otherwise impacts investors, either, of course, investing into debt mutual funds or investing into fixed deposits. Interest rate has always been a very, very fiercely debated subject, especially as inflation continues to keep digging holes in pockets. Interest rates become a very interesting topic of debate. How do you see that? It's not just India, actually. Interest rates have been going up everywhere else in the world. We have also seen 2.5% rise in rates from RBI. Where is that part of the market moving, and how should one use that to their advantage when one is thinking of financial investing?
So inflation has gone up across the world. In fact, the developed world is seeing inflation, which has been unheard of over the last 4 decades, and that's why they are seeing interest rates which are at multi-year high. This has been one of the most, I would say, one of the biggest tightening cycle for several central banks in the world, including U.S. Federal Reserve or Bank of England or European central banks and several others. And inflation has gone up for a variety of reasons. I think the huge pent-up demand post-COVID open up, the lot of supply chain disruptions. I think even like the whole climate change, which has led to, I mean, structurally pushing up inflation in several spheres. Also, the amount of money printing that happened during COVID, both by the central banks and by the governments world over, has also played a role in pushing up inflation and some of the factors which are related to the labor markets. And all of this, as I mentioned, has led to like inflation going up in a very, I would say, at a global level. Relatively, very interestingly, relatively, I think the inflation in India overall, relative to rest of the world, particularly the developed world, I think we were not as, I would say, worse off as many of the other developed countries. And I think overall our policymakers have done a good job. We have seen a spike in the CPI number that you would have seen last month, but that's mainly driven by the food inflation, particularly some of the vegetable prices that have moved up. But I think RBI has hiked rate, RBI has reduced the liquidity, so they are working a little bit on demand calibration. On the other side, government has taken a lot of steps to augment the supply side, And over a period of time, if we are able to contain inflation and bring it in the RBI's comfort zone of 2 to 6% and anchored around 4%, uh, of the inflation, I would say that this bout of inflation and interest rate hikes might be behind us. But looks like, at least in the near term, looking at some of the structural factors that I mentioned earlier, maybe unlikely that in the very near term we go back to the inflation that the world got used to for a long time. And in that case, fixed income actually becomes a very interesting asset class. The current yield of several of the debt funds was like as low as 3, 4, 5%. And now, even a liquid fund or a money market fund or an ultra short fund or a low duration fund would have a current yield in excess of 6.5, 7%. I think if you take a little bit of duration risk or a credit risk, then the current yield is even higher. And over a period of time, I think you get compensated well when you invest at these kind of levels. So I think fixed income is also becoming an attractive asset class for investors. And then, of course, in mutual fund you get the benefit of liquidity, diversified portfolio, transparency, and ease of getting in or getting out.
So one of the best rates right now, you would put it, or you expect that this could move higher further from here?
I think timing that may not be very easy to catch. I mean, in markets, not only about the bond market, but Shobit, I mean, in any market, catching the top or catching bottom may not be easier said than done. But I think looking at the yields, I think it looks an interesting asset class to look at.
Okay, no, no, that's fair enough. Uh,
And I think you
One or
can
two
also
last,
play through the hybrid fund. The point that I made earlier, that I mean, if you are investing in let's say an hybrid equity fund, where you have two-thirds of the portfolio in equity, and we know, I think the long-term prospects of India are good. But on the other side, the one-third of the portfolio, which is into the fixed income securities and money market, there the current yield of the portfolio has gone up. So I think the investors can also play it through the hybrid funds.
sure, sure, no, that's fair. In fact, last few pointers, and then we'll try to wrap it. It's been so interesting, Navneet. I just not wanting to stop. So let me just ask you. We are at the stage where we spoke about our independence. Investing is all about finding financial independence. As an investor, what does that mean to you, and how do you think about financial freedom?
So I think your ability to meet your goals, I think your ability to live your life the way you would like to live, and it's very important that investors recognize this early. I think one of the mantra in our industry we keep saying is the start early, invest regularly, and over a period of time that provides you financial freedom. And some of the things that we need to keep in mind when we think about financial freedom, because we also have I would say maybe a generation which believes in zindagi na milegi dobara, and you actually start thinking of spending and then you look at your income, and but it should be other way around, right? I mean, it has to be your income minus savings to meet your future goals that provide you financial freedom, equal to should be your spending. And two or three things that people need to keep in mind. Number one is that I think we are in a country like India, which we discussed earlier, will remain one of the fastest growing economy in the world. And if you look at the overall nominal GDP growth, I mean, 6.5% real GDP growth, and you add inflation, we are talking about the economy itself growing at like double digit, and then individual your income will keep growing, and that's why your ability to invest goes up. The second is the longevity. I think we underestimate this aspect in investing, that the average, talking about the Independence Day, I think in the first Independence Day of India, that time the average life expectancy of an Indian was like mid 30s, and today it's like 70 plus, and maybe in our lifetime it's going to go up even more. So I think you need to have a retirement corpus which is substantially higher than maybe what our previous generation needed. And on top of that, one also needs to put the other social, the dynamics which are changing in terms of the number of people who will be there to support the older generation, right? So you need to save. Everybody needs to save a lot more for to take care of the longevity of life. And third is the lifestyle inflation that in most of our financial planning, we look at the inflation, which is, let's say, a CPI or so. But our lifestyle is improving, right? I mean, India is a $2,500 economy. Over a period of time, it goes up, and our lifestyle is changing. The kind of things that we consume, the way we live our life, and one needs to keep in mind how will you maintain that lifestyle over a period of time. Our goals are changing, and that's why one needs to save more. So the true financial freedom would be that you can have that life where you don't have to worry about your finances. You may have some other worry, but you don't have to worry about your finances, and then save, keeping those goals in mind, keeping that long term horizon in mind.
Wow, wow,
And
that's quite.
we are all lucky to be in a country where there are very few countries in the world, Shobit, where for such a long period of time the nominal GDP has been growing at a pretty decent rate, close to, like, a double digit rate. You have a corporate sector which has been growing its profits at a rate which is slightly higher than that, or almost same as that. And you have a stock market and a mutual fund industry where even with few hundred rupees or a few thousand rupees per month, you could participate in that growth. And market cap has grown at a rate which is faster than the growth rate of the economy and the corporate profit, slightly faster logically. I mean, it should be in the line. And which is the most interesting aspect of India's growth journey, because if you compare ourselves with China, let's say, over the last 25, 30 years, while China was the fastest growing major economy in the world, but for a very long period, um, the stock market did not deliver that return, because growth was a lot more state driven than the entrepreneur driven, and the capital markets or the mutual fund industry could not deliver that growth to a minority shareholder, or a small investor in mutual fund. And I think over the years we have only I would say progressed on that front, and I feel very excited about this aspect of India's growth, that even if you are putting that 100 rupee SIP, you are participating in the growth of the country in the same manner.
I think that's my takeaway from the evening. That if you think you're going to live longer, you need to start early and you need to start saving more. So it's a good reason to start to save, and I think that's a lovely way to put it, Navneet. I think would want to end by asking you. You write Person of the Year at the end of every year. Uh, who's looking like the leading contender for 2023?
No, not yet. I mean, haven't thought about that. But on a lighter note, I mean, the pace at which things are changing in the world. I mean, I say there are three things about the world we are in. Everything is, I don't know. I think it's Professor Garrett or who put that very rightly, that we are in a world where everything is uncertain, everything is faster, and everything is questionable. And on a lighter as well as serious note, whenever anybody asks about the world we are in, and what I think of the world in next few months or few quarters, I say this sentence, that the world we are in, the only thing I can say with certainty, the world we are in, the only thing I can say with certainty is continuity of uncertainty. So that's an interesting world we are in. But at the same time, um, I mean, we are all very lucky to be in this Amrit Kaal. We are very lucky to have an ability to participate in one of the best growth stories of the world. And even with a small amount, I think thanks to our regulators and the ecosystem partners like you, all of us have an ability to participate in this growth by investing even small sums every month.
Great. I think that's been an awesome conversation, Navneet. I look forward to many, many more such interesting conversations. Thank you for taking your time out, and I hope listeners would have really got a very, very clearer understanding of where we stand and how should they think and plan about their financial freedom. Thank you so much.
Thank you, Shobit. Always a pleasure talking to you.
Thanks, everyone.